What's going on, traders? Today we're talking about price action and how it's different than price movement. For starters, in the last video we talked about price movement. It's simply just the change in price over a specific amount of time. This accounts for small changes in price, large changes in price, up, down. It's just a very general concept, and it can be plotted on charts, candlestick charts, line charts, bar charts, etc. And price action is just the study or analysis of price movement. So it takes into account trends, sometimes patterns, support and resistance levels, a lot of price related concepts such as consolidation, accumulation, manipulation, break of structures, liquidity sweeps, fair value gaps, order blocks, equilibriums, etc. And we can dive into all of that later. And if we wanted to use price action trading to our advantage, we would typically ignore any oscillators and indicators as they are lagging. And while some traders that I know do use oscillators and indicators in confluence with their price action trading, we're just going to ignore it for now as we don't need to use it for an example. But if we were to take a look at the Great British Pound to US dollar on the 1 hour time frame, we would see that we are in a downtrend over here and consolidation and accumulation starts to take place. We then see that manipulation takes over right through here, which is just price taking out liquidity or a liquidity sweep, and that gets formed through here. This liquidity sweep forms two fair value gaps and an order block. And so price will typically come down to this fair value gap, to a fair value gap, and rally upwards. So if I were to place an order, if I were to try and make a trade, I would typically wait for this liquidity sweep, this rally upwards, and this retracement to this fair value gap, and I would put an order right around here. Price would then rally upwards, and I could hopefully make a profit a little later in the day or a little later in the week. And it's also important to know that we were in an equilibrium, a long range equilibrium. We were in that bottom 50th percentile. And this is the foundation and basics of price action and price action trading. We're taking a look at the historical data and the psychology behind price movements of the past, and we're using it to our advantage to make informed decisions on when to enter and when to exit the market to maximize our profitability. Thank you guys for watching. If you have any questions or comments, please leave them down in the comments below, and I'll get to them as soon as I can. Thank you.